Welcome back. And thanks for following along in our series on the US and French tax systems. In this final episode, we're turning our attention to wealth, estate, and inheritance taxes, and how the rules in each country affect your long-term planning. Whether you're growing a business, buying property, or thinking about what you'll pass on, understanding these taxes now can help you avoid surprises later. Let's walk through the differences. Let's start with France. France no longer has a general wealth tax, but it does impose a real estate wealth tax called impôt sur la fortune immobilière. If your net value of real estate assets, worldwide for French tax residents and only French property for non-residents, exceeds 1.3 million euros, you may owe an annual tax based on their value. France also imposes inheritance taxes, and they can be significant, especially depending on who receives the assets. The rates vary based on your relationship to the deceased. Spouses are tax-exempt. Direct line relatives, such as children and parents, pay lower rates. More distant relatives or unrelated beneficiaries face much higher tax rates. Now let's compare that to the United States. The US doesn't have a general wealth tax, and there's no federal inheritance tax. Instead, it has an estate tax, which applies to large estates when someone passes away. But here's the key difference. The exemption threshold is high. As of 2024, an individual can pass on up to $13.61 million tax-free. Couples can combine their exemptions for a total of $27.22 million. Only the portion above that amount is taxed, at rates up to 40%. However, some states impose their own estate or inheritance taxes, often with much lower thresholds. So it depends where you live or where the property is located. So, what's the big picture? France taxes real estate wealth annually and imposes inheritance tax at many levels. The US focuses on the large estates with broad exemptions, but state-level rules can complicate things. If you're living or investing across borders, it's essential to understand which country has taxing rights and plan accordingly. When it comes to protecting your assets and planning for the future, understanding these rules is just the beginning. Estate and inheritance taxes are complex, especially across borders. But with the right guidance, you can reduce exposure, avoid double taxation, and leave a legacy that reflects your goals. Thanks for watching our series on the US and French tax systems. Whether you're building a life, a business, or a long-term financial plan across borders, we hope this gave you a clearer path forward. If you still have questions, make sure you reach out to us at orbis.com.